Hey guys, this is Alex from Low Key Millionaire here. I'm walking through this neighborhood in Southern California. It's a beautiful neighborhood, but these houses are super expensive. These houses are at least $1 million, closer to 1.5, some even approaching $2 million. And it got me thinking, man, California is ridiculous. It is super duper expensive. It might come as a shock to you guys who live in the rest of the country, but this is how life is here in Southern California. And walking around these houses got me thinking about Trump's 50-year mortgage plan, which is what I'll talk to you about in this video today. So this is an emerging topic that that Trump has tweeted about, and that has gained a lot of traction and has actually, to be honest, gained a lot of popularity, and I'll explain my thoughts in this video. So let's not use California prices as an example, but let's just use the median home price of America as an example, which is right now currently about $450,000 for a single family home. So $450,000 house. And let's say traditionally you get a 30-year mortgage. 30-year mortgage is like the standard default that most home buyers get these days. I think over 90%. And so right now the current interest rate for a 30-year mortgage is about 6.25%. And that brings the monthly payment on a $450,000 house to roughly about $2,700 a month. $2,700. And if you were to pay off the entire mortgage, take the whole 30 years to pay off the entire mortgage, the total interest that you would pay is somewhere around $547,000, which is shocking, which is, just thinking about it, on a $450,000 house, that is a tremendous amount of interest. That's more than the house itself, right? But wait till you hear how much interest you'll pay for a 50-year loan. So just for the sake of this example, let's keep the interest rate the same, which it won't be in real life, because the 50-year mortgage is much riskier for the bank than the 30-year mortgage. And so in exchange for accepting more risk, they have to increase the interest rate, right? There's no way that the 50-year loan can be the same interest as a 30-year loan. The 50-year loan will have a higher interest rate. But for the sake of this example, let's just say that it's the same 6.25% interest as the 30-year loan. So on a $450,000 house, the monthly payment on a 50-year mortgage is about $2,450. So compared to the previous 30-year loan, which was about $2,700 a month, yeah, I guess you could be saving like a couple $100 a month, right? But get this, the total amount of interest that you pay if you take the whole 50 years to pay off the loan is over $1 million in interest only, guys. Interest over $1 million in interest for a $450,000 house. Actually, just thinking about it, the interest will be even higher because, as I previously mentioned, the interest rate will be higher for the 50-year loan than the 30-year loan. So you'll be paying even more than $1 million in interest. That is insane. That is financial suicide. That makes no financial sense whatsoever. I hope you guys see that. But, and get this. Okay, so let's just do some very basic math. The average first-time home buyer is 40 years old at this point in time. 40 years old. So if you tack on a 50-year mortgage, you guys, 40 plus 50 is 90 years old. You'll be 90 years old by the time this mortgage is paid off. Statistically, Americans on average, they have a lifespan, they live up to 78 years old or so. So statistically, realistically, you are going to be dead before the mortgage is paid off. And so you'll have to transfer that mortgage payment, that debt, to whatever heirs that you have. Talk about not even trying to build generational wealth. We're now building generational debt for our future generations. This is absolutely bananas. And another thing is, people think that this will solve the housing crisis. This will make housing cheaper. No, it will not. It will make housing more expensive. Let me explain. So a very similar phenomenon has happened to the car industry, the auto industry. The car industry, in previous years, the loan was about 4 years to pay off a car. But now they have increased the loan term to about 7 years. And so, yes, I guess the monthly payment decreased a little bit on cars. But guess what happened? The automakers just jacked up the prices of all these cars. Nowadays, the average price of a car is about $50,000, you guys. And so it just makes sense, right? It's just capitalism. Like, if people can afford to buy a more expensive car because the monthly payments are lower, because the term is longer, then of course they would just jack up the price of the car. I mean, it's just mathematically, it just makes sense. It's just human nature to like increase profits and get more money, as any capitalist would do. And the same thing with colleges and these universities. So these colleges, they discovered that no matter how much they raised the prices, no matter how much they jacked up the tuition, all these students, they would just keep paying it. They would just keep taking out more and more and more loans, just keep taking more loans out. And so, of course, what happened to the cost of college now, of university? Well, the cost just skyrocketed. I mean, like, it went through the roof because the loans made it possible where they could just charge an ever increasing amount and people would just line up and just take on more loans. So I'm telling you, the same thing that happened with the auto industry, the same thing that happened with these universities, that would be the same thing that would happen to the housing market if this 50-year mortgage plan were to go through. It would increase the price of houses, you guys. It would not decrease, it would increase the price of houses. And by the way, you're not addressing the root cause of the housing crisis. Like, especially here in California, where the housing crisis is simply because there's not enough houses. Like, there's not enough houses being built. There's too little supply for too much demand. And so guess what happens? The price goes up. We don't need more 50-year mortgages. We don't need to save $100 a month just to be able to pay over $1 million in interest. That is absolutely not the solution. This is absolutely insane. Imagine that, you guys, 50 years. Okay, so it's 2025 right now. How do you like the ring of this? Your mortgage payment will be done in 2075. 50 years from now, the year 2075. Can you imagine that? Yeah, I could go on and on about this stuff, but that's the America that we live in. You know, we have Netflix subscriptions, we have Amazon Prime subscriptions. Now I guess we have 50-year mortgages to pay. You know, like, everybody's just going to be on a subscription, on a payment plan for everything, you know. God, 50-year mortgages. At that time, by then, I think I would just rather rent, right? Like, I'd rather just be a renter, because for 50 years, if you're paying it off for that long, you don't have equity in the property anyways. So I would just be a renter at that point. I mean, I think the only like people who benefit from the 50-year mortgage is probably like bankers and maybe some developers and stuff like that. But the rest of the people, like all the borrowers and the housing market in general, is going to get screwed because of this plan. Anyways, let me know what you guys think and about this 50-year mortgage, and I'll see you in the next video.